Good morning and hello. Welcome to this month's webcast, Controlling Unemployment Costs, Paperwork, Claims, and Tax Options. Today's webcast is brought to you by 501c Agencies Trust. 501c Agencies Trust is the nation's oldest unemployment program for nonprofits. Many of you on today's webcast are already working with 501c Agencies Trust, and we thank you for that relationship. Before we begin, I have a few things to remind you of. This is an interactive program, so please forward us your questions as we go. We will address as many as we can at the end. A PDF copy of the slides, as well as a recording of the presentation, will be emailed to you later today. If you desire HRCI or SHRM credits for today's program, you must complete the survey at the end of the webcast. It will pop up when you are done. If you miss the pop-up, you can access the survey in our follow-up email later today. Please give us a week to 10 days to return the credit to you. Finally, please join us for any of our future programs and let us know if there is a topic you think we should cover. So here I've got today's agenda. We have divided the subject matter into three parts: unemployment taxation options for nonprofits, talent management strategies to help prevent claims, and then a review of the unemployment claims process itself. But before I begin, I would like to introduce our panel. First of all, I am Heidi. I'm the first presenter on today's panel. My name is Heidi Posada, and after several years of working in the nonprofit sector, I came to 501c Agencies Trust, where I have the opportunity to work with nonprofits all over the country and helping them learn ways to save money that can be put back into their mission through the unique money-saving option of reimbursing for your state unemployment. After me, Maureen Marfelt will be presenting, and she is a human resources professional with more than 35 years of experience. She has spent a majority of her career serving the needs of nonprofits. Maureen began her tenure with 501c Agencies Trust in 1992 after she was asked to design its HR services department. And then the last presenter on today's panel will be Tammy. And Tammy is with Equifax Workforce Solutions. She has more than 20 years of experience in the unemployment claims management field with extensive experience working with multi-state nonprofits. So with no further ado, I'm going to go ahead and get to the bulk of the presentation. First off with a discussion about just a brief overview of state unemployment and why it's a little bit different for the nonprofit sector. So first, start with a little bit of history about nonprofit. The first state to offer nonprofit insurance was Wisconsin back in 1932, so they were ahead of their time. Fast forward a couple of years to 1935, the Social Security Act created a nationwide program. And this was, of course, giving a safety net to individuals who were unemployed involuntarily. And usually they get up to 26 weeks of benefits, but that does, sometimes it's a little bit less depending on the state. And of course, there's times that there was more during when there was federal extensions. The big picture is this is a program that it's overseen by the federal government, but the states do have their own rules and regulations. Back in the 1930s when unemployment started, it was just for the for-profit sector. So good news for you if you're doing budgets for a nonprofit, you didn't have to budget for unemployment. Bad news is if you were an employee for a nonprofit who was let go, you did not receive any unemployment benefits. And that was until 1972. So state unemployment, again, it's overseen big picture federal level, But each state has the opportunity to manage exactly how they run their unemployment. So each state has a taxable wage base, which can vary anywhere from $7,000, which means the first $7,000 of an individual's wages are taxed, and it can go all the way up to over $40,000. So states really have an opportunity to determine what that taxable wage base is. They also have an opportunity to determine how they assess a tax rate. But in every state, it is a tax rate multiplied by the taxable wages of an organization to come up with what their taxes are. Every state is run as a pool. So everybody in the state that's paying into the state unemployment insurance puts their money into this pool, and then it's taken out as people file for claims. So if you have if you have unemployment that exceeds what you're paying into that pool, that's a great benefit for you that's a pool. And as some of you are probably aware, especially during the most recent recession, those pools can go insolvent, and those can cause some challenges for the states, as well as unexpected increases to your state unemployment insurance when they're trying to replenish those insolvent pools. So as I mentioned, up until 1972, nonprofits did not pay into state unemployment. Fast forward 1972, there's some amendments made to that Social Security Act, and one of them did impact you as a nonprofit. The nonprofit sector grew tremendously between the 1930s and the 1970s, and with that growth, there's a lot more people that are being employed and that may need unemployment. So what the government did, and this is at a federal level, is they came up with an option. And this applies to 501c3 nonprofits, also to tribal entities as well as municipalities, so your city government, your county. We're all given an option. They all now have to pay state unemployment, but now they have an option to pay that rate that I discussed in the previous slide, or they can reimburse the state only for the claims paid. And that means instead of getting a bill from the state based on that taxable wage times that tax rate, you are just paying for the claims that were filed against your organization. So why do we have this option? Why do you as a nonprofit have this option? Typically, you have lower turnover than the Apples, than the Microsofts, than the Boeings out there. You have lower turnover, which of course then leads to fewer unemployment claims. So it's a great option for a nonprofit who fits that category, who has low turnover and has unemployment less than what they're paying in state unemployment insurance. For the former employee that leaves, they still, everything is pretty much the same as they most likely don't even know if you're reimbursing or paying in the state. They still file with the state, and the state will still pay for their unemployment regardless of the option that you as a nonprofit have selected. So how reimbursing works is a claim is filed, the state pays for that claim, and then the state just sends you, whether it's a monthly or quarterly bill, they send you just for dollar. There's no added fees. There's no fee for running the Department of Labor, the Employment Department. There's no extra fees. It's just a flat fee based on what that claim is. And again, this is very seamless for the employees. They have no idea what method you have chosen. And there are some risks when it comes to reimbursing. Partly, like I talked about the recession that recently happened, there can be a skyrocket in claims that you might not be ready for. You're now also responsible for every dollar that is paid out. So auditing your claims is pretty important now. You want to make sure that the state errors aren't impacting your budget. You also, if you fire someone for cause, a lot of nonprofits like to say, well, they were really nice. I know that they stole from our cash register, but you know what, it's a really nice person, and we want to make sure that they land on their feet. But you might also want to say, oh, I'm not sure we want to pay unemployment for that person. And so you do want to make sure that you have the opportunity to manage and fight claims, and that can involve staff time and labor. There's also potentially extra time and planning if for budgeting. Again, the highs and lows of unemployment can be challenging to manage, and just there's so many intricacies of the unemployment law and how to manage claims, and it'll be very important that staff understand that process if you do choose to reimburse. And it seems to be trying to, oh, here we go. And so again, I've kind of talked about some of the challenges and risks of reimbursing. We have 1,500 nonprofits that reimburse with us, and why? Because I might have just painted a pretty scary picture. There can be a huge savings, up to 40%. I've worked with some organizations recently that I'm projecting over $100,000 a year in savings. We had one at one time that had $1 million a year in savings. Now that was obviously a pretty large organization. But if you think about, if you are paying state unemployment insurance right now and you think about what you're paying, you think about 40% less, and that is an annual savings. So that's money that you can put back into your budget, put back into your mission. Also, with reimbursing, you're avoiding if a state goes insolvent and suddenly you have extra premiums to pay, or the unexpected changes in state laws. You get to avoid that because you have control over those expenses. And if you just look at, I come from a fundraising background, and this being aware of donor dollars was always very important to us, knowing, making sure that we were spending our money wisely. If you have a chance to save 40%, that's a really good thing for your donors to be aware of, to make sure that the money is going as much towards the mission as possible. So I hope you found that information helpful. I'm going to turn it over now to Maureen, who's going to be talking about preventing unemployment claims.
Thank you, Heidi. Hello, everyone. Nice to be with you today. I'm going to talk about how to prevent unemployment claims. I'm doing the Human Resources program for the nonprofits and the trust for 26 years, and certainly have gotten to know all nonprofits and giving my 100% attention to them in the human resources area. So my aim today is to talk to you all about preventing unemployment claims through starting out, excuse me, I'm trying to go on to the next slide here. Okay. Okay, there we go. They're a little slow, aren't they? How do you control your unemployment costs? Well, it starts out with those hiring practices, which is very important. You want to get the right applicant, right, who's going to stay with you and be happy and do the job, of course. So it starts out with good recruitment. Not always easy, is it? You need to find those people and those bodies and meet your ratios. It's important not to rush the hire. I know a lot of you work with children and people with disabilities and hospices, and you need to have a certain amount of employees working with a group of children or those with disabilities. Sometimes you feel rushed. You lose somebody quicker than you thought you were going to. But please be careful with this. Have a planning process for your organization. Prior to the need to hire, have a list of good resources to post those positions with, such as colleges and universities, the social media platforms that are available now, and I'll talk about that in a little bit. And of course, you post your jobs internally. You may have some areas you go to, resources such as Idealist Careers or Opportunity Knocks to place those jobs. There's a platform used now. This is what technology has provided to us, which is LinkedIn. And my understanding is that they do have a part of LinkedIn for nonprofits. And it's so important. This is such a great media. It gives you could show more about your organization through that, what your organization does, and that will make it easier for your candidates to engage with you. My understanding from LinkedIn, they have 6 million nonprofit members and 22 million members who follow nonprofits. Also, have a clear and comprehensive job description. Job descriptions are so important in the recruitment process. So before advertising for the position, it's important to make sure you know who you are looking for. And the best way to do this is to create that detailed job description. Have the supervisor, human resources, and whoever is part of that process sit down and look at that job description. Or if someone's leaving that job, have them look at it again and make sure that you have all the duties in there and what is expected. The job description is a written narrative of the essential duties and responsibilities of any position. Let's go on. Oh, I don't want to go on. Let's look at conducting the interviews. How do you best conduct an interview? It's always a challenge, isn't it? So it's very important to provide training to your employees who will be conducting interviews. In addition to guidance on how to conduct the interviews, the employees who will be interviewing the job candidates should be informed about the appropriate subjects for inquiry and topics to avoid. Ask the same questions of all interviewees. By asking the same questions of all the applicants, you can avoid a claim that any one particular individual was singled out because of a protected characteristic. Preparing a written questionnaire before doing this is very important. It can ensure consistency and can be especially helpful to those supervisors and managers who are not experienced with interviewing job candidates. Also, limit your questions to job-related areas. Interview questions should focus on the education, experience, and abilities of the applicant and the suitability for the position. And then maintain detailed, careful notes. Notes taken during the interview should be objective, detailed, factual, and concise. Avoid gratuitous comments unrelated to that applicant's experience and qualifications for the position. Always keep in mind that notes created during the interview process can and will be provided to the applicant if someone were to get litigious and file a lawsuit or an EEOC claim. So just be careful in your interview process. Why am I bringing this all up today? Well, I'm trying to help in the first stages of bringing somebody on and getting the right applicant, so you can avoid any unemployment claims. Some don't regarding to the interview process. Please be careful. I hear this every once in a while on the hotline that, oh gee, somebody thought they were really going to get this job before the whole process has been completed. Avoid promises. And an interviewer shouldn't make any promises. Simple comments about the hiring process or job security may later bind that employer. Avoid questions or comments about an applicant's disability. You may ask whether the applicant is able to perform the functions of the job with or without reasonable accommodation. You can do that. But you do need to ask this of all applicants and also show that job description that lists the functions of the job. If an applicant's disability is obvious or volunteers that they have a disability and you reasonably believe accommodations will be needed, that's a point in time you may ask if they need a reasonable accommodation. Important. Don't ask questions about any personal information. The Employment Opportunity Commission, EOC, which is eoc.gov, has great guidelines on what an employer can or cannot ask during the interview process. I know we provide a list to our trust members all the time of what they can and cannot ask during that process. Go on to the next slide. I was just a little slow from my end of getting to the next slide, so bear with me here. Here we go. Okay, what else is very important? You know what I left out? I'm sorry. Let's go back to conducting interviews. See if I can get back to that. Sorry. Well, let me just talk about, oh, here we go, background checks and references. Also, another piece that we have to do, and very important. The major benefit of a background check is that it helps prevent negligent hiring. Also, it's a protection to your vulnerable population. I recommend you check information from the EOC, once again, on background checks, and please your own state because they could have different rules. Under the EOC guidance, an employer must demonstrate that any criminal history screening practices needs to be both job-related and consistent with business necessity. There are also local ban-the-box ordinances now, such as in San Francisco and Los Angeles, that eliminate the commonly used criminal history check box on employment apps. So check this out, and even with your own states. Also make sure you have a separate sheet from the employment application for that applicant to sign the final, that you will be doing a background check and then giving permission and understanding that their job is still dependent upon that. Then you're going to want to check out references. I want to make note of something. I know more and more employers, even in the nonprofit sector, are using the social media screening. Be careful with this. Employment law firms advise that employers should be aware if they outsource social media screening. That can be dangerous. It's recommended either conducting social media screening in-house or asking your vendor what they are doing to comply with the Fair Credit Reporting Act, FCRA, to remove even the possible perception of discrimination against protected characteristics such as race, gender, religion, and disability. It's important to shield that with others that are part of the interview process, you know, your supervisors and others that will be interviewing before making hire decisions from the social media screening process. Don't have them do it. If you're going to do it, have human resources or the person who wears that hat do it, and share only job-related information. Check only public sites for social media, and refrain from asking candidates to provide passwords to view the content. Also know your state laws. A number of states have off-duty conduct laws that prohibit employers from taking adverse employment action based on conduct outside of work. This may include personal information discovered or social media. We did a recent survey, and we must say we did not find a high percentage of nonprofits using this tool. And I know some that do, and I'm sure they're very careful when they use it, but I'm very cautionary about it. If you decide to use it, you have to be extremely careful. Then going on to references, which are very important, and we recommend 3 references. Our supervisors are the best sources of information, or coworkers. Don't use personal friends or family references. Be consistent. If you check one candidate's reference, check all the same way. Once again, get the candidate's agreement as you did on the background check via that application form that you may contact former employers, and let the contact person know you have the candidate's knowledge and agreement. If you eliminate a candidate because of the bad reference, document the business reasons for doing it. Now I'll go on to that next slide. Let's talk about good management practices through orientation and onboarding. One of the most important steps you can take to retain employees is to conduct a well-planned and thorough job orientation or onboarding. Effective employee onboarding makes sure the new hire feels welcomed, comfortable, prepared, and supported. And this should lead to the new hire's ability to make an impact within the organization, both immediately and over time. Hope is that this leads to satisfaction and the key word here, retention, which allows the organization to continue to meet its mission. In order to position a new hire for success, it's important that you prepare in advance and to continue to support the new hire throughout the first several months and beyond. For example, have an agenda for the first week on the job. As part of the agenda, schedule times for the new hire to meet with key staff members. Have a checklist documenting all steps taken and completed during the first week and put in the employee's file. The quote I like from Amy Hirsch Robinson, principal at the consulting firm, the Interchange Group, is, quote, "Onboard is a magic moment when new employees decide to stay engaged or become disengaged." It's all that communication and making sure that your employees understand and are happy with what they're doing. Engagement, I know this word's used a lot. It's really just what I said. It's making sure the employee is comfortable and happy with and understands their job. Several research groups, ROI Institute and the Cultural Works, warned that organizations pay a high price for failing to accomplish employee engagement. Disengaged employees reportedly cost an estimated $450 billion to $550 billion a year in the United States, while no more than 1/3 of employees are truly engaged at work worldwide. I know it's a challenge for nonprofits. You don't always get to pay the salaries you want to pay, but that's really not the compelling reason an employee may come to work at a nonprofit. They want to work with nonprofits. They have a passion for it. The key here is to make sure they are happy and engaging them and understanding what's going on with them and communicating. Set clear employee goals and expectations. When it comes to employee happiness and retention, clear communication goes a long way. Ask yourself, do the goals of your nonprofit line up with the goals of your employee? Are your employees engaged? Do they feel passionately about the organization's mission? If not, work on communicating the organization's vision and set clear goals and expectations with each employee. I think mentoring is very important also, if you're able to do that. It improves employee engagement and motivation, nurtures professional development, and increases internal promotion. It should develop a sense of belonging and encourages greater ownership of organization culture, facilitates the transfer of knowledge, and reduces recruitment costs, and should develop new leaders for your organization. Have you ever heard of the STAY interview? We are finding it isn't a well-known activity, even though it's been around several years. But I think it's an excellent retention tool. STAY interviews are a periodic one-on-one, or maybe more often, proactive approach to obtaining information from a highly valued employee. STAY interviews are used to engage those valuable employees and find out things before the worker has resigned. This gives managers a chance to address and correct problems sooner. It's also an excellent tool to find out what staff love about their job and the organization they work for and why they're staying. It's definitely different than the exit interview. The exit interview is important when someone has decided to leave. I consider it more reactive than the STAY interview, which is proactive. Both typically give you good, actionable information. An exit interview can give an organization information as to why the employee has chosen to move on. So think about the STAY interview. You may want to put that in place in your organization. I'm getting to my last slide. Okay, here we go. I talk about documentation all the time. That's all us HR people do, right? And I also do a webinar on that for our members. So why is documentation important? Well, it's certainly related to preventing unemployment claims. It provides evidence that an employee was constructively aware of the rules, verification that the employee heard and understood the rules and policies, and is evidence that the policies have been consistently applied and enforced. Good documentation should help support your position that you did or did not do something. You, of course, want to avoid liability through good documentation practices. However, if it's bad documentation, that certainly can limit future flexibility. If the record does not include those important facts or does not clearly and consistently identify the reason for the disciplinary action, it will be difficult for the organization to persuasively dispute an unemployment claim. So very important, record all important facts. A good document should record those facts and the basis for any decision in a manner that will be understandable and persuasive at an administrative hearing. Assume that all important facts and decisions will be challenged, because they will, and prepare documents with an eye toward the facts that you will want to establish. Ideally, documentation should provide the framework for explaining your decision to all parties concerned. A good document should record all important facts, once again, showing the decision was well thought out and was fair. Of course, you're all fair employers. But unless you have that good documentation showing it, you're not going to win that protested unemployment claim. It's very important to go through a good process, especially when it comes to the disciplinary process of getting it all well documented and showing that we start talking out to that employee with that verbal documentation, and then we went to the next step on the written documentation, gave them a timeline, or talked about those policies and procedures not being followed and how they needed to be followed, and showing them that policy. And then if they still did not follow them, we may need to go to the next step of termination. The objective reference, be objective. Reference specific facts, not feelings or opinions. For example, I have a snapshot I'm going to share of an example of a documentation tip. We're talking about attendance issues, which aren't always easy to deal with. There's so many things we have to look at. But poor documentation would be your abuse of sick leave causes your department problems. Doesn't really say anything, does it? It's better to give the dates and times that this person has missed work. Talking about the pattern of those absences. But let me give you some language that's good to go along with that to explain it, the facts of it. The number of sick leave incidences has disrupted the workflow in our department and caused unscheduled overtime by others to cover your workload. In addition, a temporary worker was assigned to your area in order to guarantee the deadline for the project. So you're giving an explanation of what this has caused. You're giving the dates and time, and then you'll go on to say what needs to happen. And maybe you're getting close to saying things aren't working out. And if this doesn't improve, the next unexcused absence may be cause for further discipline, including termination. I'm coming to the end of talking about why I think HR is very important in avoiding unemployment claims, and of course the good documentation, and starting from the very beginning of hopefully getting that great applicant and then a good employee who stays on. No one's going to stay on forever, but you can avoid unemployment claims if you're having an employee who hasn't been a good employee. Deal with it early on. Very important to get it documented. And as I always say in my training webinar, if it's not in writing, it never happened. So thank you. I enjoyed talking to you all today. Please submit your questions. I'm going to be here through the end. I know Tammy is now going to talk to you about unemployment claims and how to deal with them. Thank you very much. Tammy?
Thank you. Yes, thank you, Maureen. I appreciate that. So now that Maureen entertained us and gave us lots of great information, I'm going to bore you with unemployment. My name is Tammy Reidenbaugh. I'm actually a client relationship manager with Equifax Workforce Solutions. January 2018, I will have been with the company for 22 years, so I still have a lot to learn. As a client relationship manager for Equifax Workforce Solutions, my sole responsibility is to direct the management of the unemployment cost control program for the members of the 501c agency trust. So I'm solely dedicated to the nonprofit reimbursing employers of the trust. So working with unemployment and especially nonprofits, I just want to get this out before I proceed. Nonprofits, we have a sense of justice and fairness. And as we learn more and more about unemployment insurance, we will learn that it doesn't always seem very fair. I'm going to go ahead and try to, I think I have a delay like Maureen did on the slide. There we go, slowly but surely. I'll try to remember to do that a few seconds before. As I was saying, we often have a sense of fairness and justice, and when we're dealing with the unemployment insurance program, it often will not seem fair to us. You know, and again, we have to go back to some of the education that Heidi provided, which is the purpose of why unemployment insurance was created in the first place. It was during that depression, and it was created not for employers, but for the workforce that was out of work due to no fault of their own. As Maureen gave us great insight as to the importance of documenting, not only for good hiring practices, but it is also the first step at hopefully, should an unemployment claim be filed against you in the future, it is our first line of defense in defeating that or fighting that unemployment claim. So properly documenting procedures as well as the employee's record, personnel record, is a crucial part of winning an unemployment claim, but it's also imperative to point out that often the individuals that sit on webinars and webcasts, often the individuals that we're dealing with in fighting an unemployment claim are actually HR personnel or higher. And what we do need to keep in mind, and what I want to point out here, is in this whole huge process of proper documentation and fighting an unemployment claim, we also have to be aware that raising and maintaining our management's expectations regarding the risk that's associated with UI. These frontline managers are the ones that are dealing day in and day out with our employees. They are the ones that are often responsible for properly documenting events. And 9 times out of 10, it is those very same frontline managers that have no idea of the cost of an unemployment claim. They have no idea what they do or don't do and how that impacts your agency's bottom line. So I really want to point that out. My goal has always been to not only educate employers on unemployment, but really get down to where we can see the impact, and doing that is our front line. The end result, if we do properly document our employee personnel records, you know, bottom line, should an unemployment claim be filed against us in the future, the end result of how that outcome is going to be is really dependent on that employer-employee relationship and relative to the actions that took place. I did go ahead and proceed to the next slide, so I think it's just delayed. There we go, very delayed. So through proper training and expectations and progressive discipline, we can in fact minimize the potential liability or risk should an employee actually separate from our employment, whether that be voluntary or involuntary. You know, most employers often that are attempting to quantify actual costs associated with employee turnover often use a very simplistic equation of turnover cost equals cost of hiring plus the cost of training new employees. It is extremely rare that an employer actually considers the cost of one unemployment claim, and it should be considered, as the unemployment cost for one unemployment often outweighs the total cost of hiring, training, and recruiting new employees. I did push it. I'm waiting for it to go. On average, and this is from last year, each year amounts can change that I think Heidi pointed out. Each and every state actually sets its own minimum and maximum weekly benefit amounts, as well as duration one can receive benefits. So if we took all of the states and what the maximum potential liability is, on average for all the states, an average unemployment claim could cost over $16,000. Massachusetts alone is over $30,000 for one unemployment claim. And you can often follow, and there's no two states the same. As I said, each and every state can set their maximum weekly benefit amount as well as the maximum cap or potential liability per employer. They can also determine, each and every state independently, on their charging of which employer, whether it's proportional or is it most current backwards. So they have complete control, and each and every state is different. And I'm here to tell you it is very confusing. I've been in the business a long time, and each and every year the states can change their information without any prior notification, and it's often no notification. So by looking at this cost, just to kind of hit it home, because a lot of times we don't think about an unemployment claim until we're faced with an unemployment claim. But the documentation and the recommendations that Maureen provided to us, that is the very same documentation that is often going to be used in any other potential litigation outside of an unemployment claim. So that documentation not only has to be sound and accurate to protect your agency for those potential issues, but also unemployment. So if we've got it across the board, we're doing what we need to do, we're following the proper hiring, interview, employee counselings, and documentation, we've got our ducks in a row for whatever comes at us. So as I indicated, each and every state has different regulations. While the unemployment program is truly under federal umbrella guidelines, each and every state has the ability and the jurisdiction to actually change many components over that. So with this, that means how much monetary eligibility is required to actually even receive benefits. You know, an individual can actually be eligible on the reason they're unemployed, but then not be eligible on the monetary aspect, meaning they haven't earned enough wages in the base period to actually receive benefits. And we will talk about what those chargeability as well as base period are in just a few slides. So often, because they can change this is what Heidi was talking about, is you really have no control over your costs. You know, each and every state has a different tax rate range, and the state can turn around and increase or lower that year after year. They also have, within their tax rate table, they have multiple tables. So in times of recession, those tables, the ladders on that table, are much, much closer together. So in fact, it could only be one claim that it takes to actually move you up or down on the tax rate table. Therefore, in addition, we often see changes in wage base, state wage bases. If it is tax rate multiplied by our wage base equals our taxes, you have no control over those factors. So again, just trying to stress that each and every state is different, and it's often very difficult to understand, especially if you're in more than one state, or be made aware of the changes that may be occurring in your state. I pushed the button. I'm waiting patiently. First thing we have to do is we have to, in each and every state, in addition to all those other items that the states have the jurisdiction to change internally, such as monetary eligibility, duration, weekly benefit amounts, they also can have different types of claims. In all the various states, we can have a last employer claim, a base period claim, an interstate claim, a partial earnings claim, you name it. There's multiple types. There's at least probably 15 different types of forms. But the two most important types of claims you need to be aware of is going to be a last employer claim and a base period claim. The first item is a last employer claim. It is that last employer claim in which would go to my most recent or most current employer. It is that last employer that I must be able to qualify on the reason I am either unemployed currently or underemployed. Underemployed, especially in the nonprofit sector, think of all of our part-time employees. In these cases, if a part-time employee is working, is making themselves able and available for full-time work, and it is we, the employer, who do not have that work available, they can receive partial benefits. And in order to receive those partial benefits, that means this individual is earning less wages per week than what they could qualify on an unemployment claim. So again, that last employer claim is going to qualify an individual on why they're currently unemployed or underemployed. Now, they have to be able to show that they're either unemployed with good cause attributable to the employer, okay, or unemployed due to no fault of their own. So if it's a quit, they have the burden of proof showing that they have resigned or voluntarily terminated their employment with some good cause that is attributable to you, the employer. On the discharges, we would have to be able to prove that, or they have to prove that they were unemployed due to no fault of their own. So think lack of work, or in many cases, discharges, maybe inability issues. There's no deliberate misconduct. The second type of important claim is the base period, because if an individual qualifies on all the criteria of that last employer, then it is often the base period employers in most states that are going to be charged those benefits. This is the unfair part. So oftentimes I get these questions frequently, almost daily. Tammy, why the heck is John receiving benefits and I'm paying? He voluntarily resigned from my company a year ago. And the reason being is because John probably resigned, went on to another job. Everything was fine. John's working at that other job, and lo and behold, 8 months, a year down the road, a year and a half down the road, let's say John went to work for another nonprofit, they lost some funding or grant, which we see frequently, especially in today's times, and now we don't have work for them. He's laid off, so he is going to qualify on that lack of work because he's truly unemployed due to no fault of his own. But guess who gets to pay for his benefits? It is the base period employer or employers who have reported wages within that base period to the state. Okay? And also, I did push the button. I'm waiting for the slides to change. I'm sorry. So basically, even though there could be two different types of employer, a last employer, ABC company, and base period employers, EFG company, it can, depending on the length in which an employee has worked for you, you could in fact be both the last employer and the base period employer. I've been with my company quite some time, so if I were to resign or be separated today, my company would actually receive both of those claims, a last employer and then the base period. The base period claim is really important because it actually determines how much money this individual has earned during the base period. So it's going to determine if they're monetarily eligible. It's also going to determine if they are monetarily eligible, how much in a weekly benefit amount will they be awarded should they be found eligible, as well as the duration, how long will this person be eligible, and then which employer or employers, if there's more than one, are going to be charged and what percentages. So let's talk about this ever-important base period. And we're going to spend a few moments on this base period because if you understand this base period, you've got unemployment down pat. You are ahead of the majority of the population. So for example, in this, right now we are currently in Q3, but to make my math easy, I'm going to use Q2 17 as an example. If anyone files an unemployment claim during April 1st and June 30th of this year, this is Q2 17. This is what is known as the filing quarter. Excuse me. In most states, any wages that I earned in this incomplete quarter are not taken into consideration for unemployment purposes. Now, 95% of the states will turn around and use a standard base period, and that base period is defined as the first 4 of the last 5 completed calendar quarters prior to the quarter in which the claim was filed. So in this example, if someone files a claim in Q2 of 17, that is our filing quarter. If we count back 5 quarters, we are then going from Q2 of 17, Q1 of 17, Q4 of 16, Q3, Q2, and Q1 of 16. If we use the first 4 of those 5 completed quarters, our base period would be a very nice and neat January 1, 16 through December 31st of 16. Any employer or employers who have reported wages on the SSN, and you do this in the form of wage reports on a quarterly basis to the state so they know. You're reporting those wages on the employees to the state each and every quarter. You are potentially liable. Now, each and every state is different. A lot of the states will turn around and look at 33.3% of the gross wages you, the employer, paid to that state. Some states, such as California, they use 50%. Now, there is a cap in each and every state. So if you do that equation, if I paid somebody, $50,000 and I do a 33.3%, if that amount or from that calculation is greater than what the maximum claim potential liability it will in that state is, it will automatically default to the max. So there is a cap in each and every state per claim. Now, it's important to note that once we receive an unemployment claim, let's just say we do, in fact, somebody left us, they went on to another job, and they had subsequent employment. Something occurred with that subsequent employment, and then they are found to be unemployed, and they are found eligible. We start receiving charges, and we start paying on that claim. This person could collect 4 weeks, 6 weeks. You and I don't have that crystal ball. Our hope is that they're going to go back out in the workforce as quickly as possible and become reattached to the workforce, and that is it. However, we all know of these individuals that just have a difficult time holding on to a job. It could be that we pay one unemployment claim or a portion of it, and then lo and behold, in the near future, down the road, maybe a year later from that, we get notification that we do have a second potential liability. And the reason being is because this space period is going to move each and every time this person files a new claim. Now, what is good is that once a claim is opened from the claim filing date, it is open for 52 weeks forward for 1 year, okay? So ideally, if someone were to file an unemployment claim in April of this year, and let's say we have $3,000 worth of potential liability, that's maximum for us. It doesn't mean that they're going to collect it all. But again, next year we could potentially see a new claim if that person is unemployed, and then again that base period might move so where there's even minimal amount of potential liability on the second. But it is possible, so I want to make that clear. As I already indicated, that base period does determine, just briefly reviewing, does review and determine an individual's monetary eligibility. Have they earned enough wages to even collect? Again, they could qualify on the separation reason, but not the eligibility requirement, and vice versa. They could have earned enough, but they're disqualified on the reason that they're unemployed or underemployed. So there's lots of criteria. If the individual actually meets the state's monetary eligibility and all of that is decided, I do want to point out again, you could be the only employer in that base period, but you could also be one of several employers, just depending on that individual's work history, okay? An individual, for example, that has gone straight from college into high school, they've never held a job, they were lucky enough to be able to focus on college, and they come out. Let's say we hired them. We work them for 90 days, and within 90 days we're really seeing that, you know what, there's just nothing I can really put my finger on. I just already know this is not going to be somebody that's going to work out long term for us. So we go ahead and release them. That individual will qualify on the reason they're unemployed because we're not going to be able to really show any misconduct or prove that. But even though they qualify on that, they're not going to have earned enough in the base period to actually receive the benefit. Now, with unemployment, we have to address UI integrity, and that's what the next slide is about. If we go back to 2009, unemployment rates, we were in a recession. Unemployment rates nearly doubled historic norms. Unemployment benefits actually had increased significantly, and actually reached an annual high of over $80 billion. So as Heidi was talking, when you're in the state funding unemployment program, paying SUTA taxes, this is a prime example of what she was referring to. All the states, or many of the states, became insolvent. Insolvent meant that the states did not have enough funds in their state unemployment program to run their program. When this happens, and it happens often actually, not only in recessions, the states individually can go to the federal government and ask or request what's called a title loan. This is the federal government, which we already know they don't have any money, but they come up with it, and they actually provide a loan to the individual state to carry them afloat to run the state unemployment program.
Unfortunately, in 2009, Obama had enough and basically said, you know, the states, because there's a long history of them doing this, and basically the federal government came back and said, okay, you states are not managing your unemployment program consistently or correctly because you should not always have to keep coming back requesting these title loans. Well, each and every state turned on the employers in that state and said, whoa, 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 federal government, it is not us doing this. It is the fact that we are paying out benefits erroneously on individuals that may not be receiving benefit or be entitled to benefits sheerly because our employers do not respond to us timely. They don't provide us sufficient and accurate information to make an informed decision on one's eligibility. Hence, Obama signed into effect the Federal Trade Adjustment Act. What this did is, under federal law, the states are not allowed at all to relieve an employer's account of any erroneous charges if those charges resulted in the fact or resulted from an employer not responding accurately, timely, and sufficiently to the initial request or any request for information. So this was a game changer for employers. You know, again, I've been doing this for over 20 years, and when I first started with this company, we didn't have all the electronics we have today, but it was like pulling teeth to get details from an employer on why someone was separated. And often what would happen is we'd protest a claim with very minimal information because the employer wouldn't provide it. The determination would come and the state would award benefits because we had not shown any proof of misconduct. We had no supporting documents. The employer would then say, oh no, we're going to appeal that to a hearing. We would file an appeal. Then the state would schedule a hearing, and then lo and behold, we could win it at a hearing because that's when the employer wanted to give the state all the information. Just think of that inefficient process, not only for the employer, not only for your administrator who's doing it, but more importantly for the state, a state who is running off of limited funds, trying to manage an unemployment program, and here they're having to go through all of these hurdles just to determine if someone's eligible. Now, in those old days when that would happen, we would win it at an unemployment hearing, and then we could actually go back and protest all the charges that that individual had received from the initial date of determination on up to that final hearing, and we could get credit for that. That is no longer, okay? So what we have to be aware of is under the Federal Trade Adjustment Act, the states are required to actually, in many states, they can penalize you, the employer, or your third-party administrator for instances of not replying. What they've done is most of the states have defined a pattern or failure to respond as little as 2 instances in a year. So I wanted to point that out. If you are managing your unemployment program in-house or internally, or that you do in fact have a third-party administrator currently, that both you as well as your potential TPAs are aware of the UI integrity and you're doing everything within your power to respond, okay? I know we're close to the end of time, so I'm going to try to wrap it up here. I'm waiting for my slide. Very quickly, as I already stated, with UI integrity, the penalties can be loss of rights, meaning that if you do not respond sufficiently and timely and accurately to the initial request for information, you could lose any appeal rights to appeal that and request a hearing. You could lose participation rights. If you were to win it and the claimant appeal it to a hearing, you may not be able to participate in the hearing. And most importantly, the state can impose financial penalties against you, your agency, or your TPAs. Overall, the positive effects of UI integrity, that is what the UI integrity laws were meant to do, is to restore some integrity to the unemployment program as a whole. Okay? Couple of things. I pushed the button. I'm going to push it again. I didn't want to get push happy. Really quick, to wrap this up, in individuals who voluntarily resign their employment, this is one of the biggest questions I get, and often they're like, Tammy, they can't file for unemployment benefits, they quit. And really it's all in the terminology. Anyone can file for unemployment benefits. Anyone can file an unemployment claim. It is extremely important, and here's the disclaimer. If there is any type of documentation, because I have seen it, and I've seen it in recent years, any type of agreements, separation agreements, termination agreements, etc., where we are advising employees that they cannot or will not file for unemployment benefits, it is illegal and we don't want to do that, okay? In fact, many states want us to encourage the employee that they know of the right to file benefits as well as how to go about that. So if you need any assistance in what your state is, or if the state has a separation form that you should be using, then by all means reach out to us so we can kind of guide you on that, okay? If an individual, anyone can file for benefits, and really on a voluntary quit, the question is, like I indicated earlier, is the state's going to use a prudent and reasonable person standard? If the individual can prove that their quit was due to something attributable to the employer, then they will receive benefits. But they do carry the burden of proof. They have to be able to show that they pursued all possible avenues at resolving whatever the issue is prior to resigning. Now, we would think that because the claimant carries the burden of proof that we don't have much to do in this, when in fact we do. It is those voluntary resignations that say quit for personal reasons, or provide hereby resign effective this day and don't give any information. Again, going in line with Maureen, we really want to touch base with that employee. We want to be able to document that, one, we've asked, why are you leaving, Tammy? One, as an employer, I would think we'd want to know why our employees are leaving. And number two is you are going to document that reason. Tammy could turn around and choose not to respond to your request, or again, choose not to advise you, or Tammy might actually say, oh, I'm moving to Texas just because I like the weather. This is what's going to help us in an unemployment claim should that employee tell the state something other than what is fact. Okay? Without documentation, it is he said versus she said. And usually, because unemployment was set up for employees, not employers, and whenever in doubt, the state will err on the claimant's side. Lastly, on misconduct, bear with me just 2 more minutes, and I apologize I ran over. For discharges and misconduct, you know, within our agencies, we often have many, many policies that we as an employer deem to be a misconduct and are events that could cause termination. However, as an employer, it's also important to note that each and every state has their own definition of misconduct. And again, while most of them differ slightly in wording, the basis of what misconduct is, or what is required for a misconduct definition to disqualify an individual, is the terms willful, deliberate misconduct, and it also has to be a controllable final incident. The final incident is going to dictate and control whether the individual receives benefits. It is that final incident. So I say that very quickly and using an attendance issue. We could have an employee who's on a final written warning for attendance, but on that final written warning for attendance, they call in because their child is ill, and we're going to terminate them because we told them the next absence would cause that. You have every right to terminate the employee. However, in order to prove misconduct, you're going to have to be able to prove that that final incident, that child was not sick or that employee was not sick. And unfortunately, if you can prove that they weren't sick, then we both need the crystal ball that you're using. But we can't. What we can do is we can do better documentation. We can actually request additional information from that employee or proof that they went to a doctor or took their child to a doctor. We also, in misconduct issues, take our blinders off. We get so focused on it's an attendance case, it's a tardiness case, when what we need to be looking at is, for both of those examples, what is our call-in procedure, and is this employee following that? Okay? So we need to take those blinders off and look at the broader picture and make sure that we're encompassing everything that we need to be addressing with this employee. Failure to use proper call-in procedures is misconduct and easy to prove, especially if we've discussed it with the employee time and time again in the attendance issue. It's twofold, attendance as well as the call-in procedures. Okay? Easier to prove misconduct on that than whether or not they were sick. That is it for today. Hopefully I gave you some information that you found enjoyable or interesting. And I guess I'm going to turn it over to Heidi or Thelma.
I think
Hello?
I was going to say, this is Heidi again. Yes, thank you again for attending our webinar. And please do remember that we do have another webinar coming up in a few weeks. And I was going to try and change slides, but you will get it when you receive a copy of these slides. You will get information on our next one, Creating Dashboards That Rock, Wednesday, September 19th at 2 p.m. Eastern Time. So again, thank you everyone for attending. Please remember, if you want your credits, to take the survey at the completion, and we look forward to seeing you next time. Thank you.